Bullish on Bitcoin? Well, then you have to know about some of the stocks that I'm going to talk about today. Stocks that won't only give you exposure to Bitcoin, but the crypto market as a whole. Stocks that could be insanely undervalued based on some sound fundamentals. So, if you're looking for alpha beyond the crypto markets, this video is for you. Before we commence, I must hold you in suspense as there is some important information that I have to dispense. I know it's quite tired, but as is said on this attire, I am no financial advisor. I'm just a crypto dude sharing my personal opinion and thoughts with you. With that out of the way, I'd like to welcome all of the new viewers here today. My name is Guy, and I can never tell a lie. That's the reason why I'm the main guy at the Coin Bureau. We are your one-stop shop for everything crypto: news, reviews, overviews, and opinions too. If that sounds like something you'd like to avail yourself of, then nail that subscribe button and impale that bell. That way, YouTube can keep you tuned into all my latest videos. Okay, enough babble, let's dabble in some stocks. Let's perhaps start with one of the most household names in the crypto space, the most well-known exchange and one of the only publicly listed ones. I am, of course, talking about Coinbase. Yes, one of the world's largest exchanges is pretty dependent on those crypto markets. Go figure. However, its business model is not purely dependent on prices, but more on the demand to buy, sell, and store these assets. And if there's one thing that's become pretty certain over the past year, it's that this demand is surging. Surging from not only retail traders, but Coinbase's bread and butter, institutional traders. For those who don't know, Coinbase was the first cryptocurrency exchange to list on a US stock exchange, and it was a blockbuster IPO. At the beginning of this year, I did a video just prior to the Coinbase IPO where I analyzed its business model and its IPO price. I've linked to that video in the description if you want to come back and watch it later. In that video, I explained that the IPO price of Coinbase may have been a bit overhyped. There is strong evidence that some of the most popular tech-based IPOs have performed poorly immediately out of the gates. However, in the months that followed after the IPO, buying opportunities presented themselves. This is the case that I made in that video about Coinbase, and this is exactly what happened with the stock. On the day of the listing, the price shot up from an IPO price of $250 all the way up to $429. However, after this all-time high was reached, the stock began a steady decline. Only 2 months after its listing, Coin was trading at well below its IPO price and did indeed present a buying opportunity. By early November, the price of Coin hit above $350, only to retrace once again on a disappointing third-quarter report. I say it like that because we all know that investors can be incredibly fickle when it comes to what they perceive as being bad news. In the case of Coinbase, the only reason that the stock sank over 15% after this Q3 report is because it missed some estimates. Revenue was $1.3 billion instead of the $1.5 billion estimate. However, I think that the market may have overreacted here, and Coinbase stock could be quite attractively priced. This is because of the fact that it is an incredibly profitable business in a rapidly expanding market. Consider the fact that most tech companies take years to reach profitability, Uber. However, Coinbase is running a business with an 84% gross margin. And despite the recent drop in revenue in Q2, the growth over the year is very strong. Revenue has increased by 315% since last year. It's pretty hard to find any listed tech company that has grown its revenue at such a clip, all the while maintaining such a healthy operating income profit margin. For example, let's compare Coinbase's fundamentals with some of the most well-known tech companies out there, your FANGs, i.e. Facebook, now Meta, Amazon, Netflix, and Google. Let's take a look at some numbers, shall we? Facebook, Amazon, Netflix, and Google had yearly revenue growth of 38%, 14%, 15%, and 41%, respectively. Nowhere near the growth of Coinbase. Or how about their gross margins? They are 79%, 26%, 43%, and 56%. But if we were to take a look at some common valuation multiples, Coinbase is cheaper than these stocks. For those stock bugs out there, you're perhaps pretty familiar with the price to earnings, or PE ratio. This is a measure of how much you're paying for a stock based on the earnings that company produces. Well, the PE ratios for Facebook, Amazon, Netflix, and Google are 25, 71, 61, and 28 respectively. For Coinbase, it's sitting at 25 times. So, people are legitimately willing to pay so much more per unit of earnings for these stocks than they would be for Coinbase. This is even more absurd when you think about the fact that Coinbase is a much smaller company in a sector that is still in its relative infancy. But that's not even it. It's about what Coinbase is planning to roll out over the next few months that could really supercharge its earnings potential. One of the things that I think could have massive potential is the upcoming launch of its NFT marketplace. This would allow Coinbase to capitalize on the current craze that we're seeing with non-fungible tokens. You can see a sample of what the NFT marketplace will look like over here in its blog post announcement. I think this could give Coinbase an amazing opportunity to capitalize on its already sizable user base. It's also worth noting just how much potential there is in the NFT space. For example, one of the most well-known NFT marketplaces out there is OpenSea. This Ethereum dApp marketplace has seen an explosion of growth and volume over the past 6 months. OpenSea is a private company, but it's recently been soliciting investment at a valuation of $10 billion. That's over 10% of Coinbase's market cap, and all it offers is NFT trading. I should also point out that Coinbase's CEO thinks that the market for NFTs could actually eclipse that of the exchange's traditional business. That's a pretty bold statement, I will admit, but it's not entirely unreasonable. Since Coinbase announced that it will be launching a marketplace, over 2.5 million people have submitted their emails to register their interest. So, that's its NFT marketplace. On top of that, Coinbase is also going to be launching additional financial service functionality, including a payroll product. This would allow users to deposit their paychecks right into the Coinbase platform and into their accounts. The significance of this move cannot be understated. It looks to me as if Coinbase is heavily moving into the banker's realm, where it's allowing users to essentially treat their Coinbase accounts like a bank account. This opens up a whole host of different opportunities for the company, which I won't go into here. The point of the matter is that Coinbase arguably has a great deal of potential as a company, and this does not warrant that relatively low PE ratio. Perhaps that's the reason that the consensus analyst estimates are for an overweight allocation and an average target price of $426. Yes, it is true that it's exposed to the crypto markets, but less so than actual prices themselves. As long as people and institutions have a need to trade and invest in cryptocurrency, Coinbase will be there making money from it. So, if you're long-term bullish on crypto, then Coinbase stock could be an attractive play. Moving on though, I want to take a look at a stock that can give you exposure to the crypto markets through a different angle. Bitcoin miners are not only fundamental to the security of the network, but they're also attractive companies to invest in. And this brings me on to Riot blockchain. For those who don't know what this company is, it has quite a colourful history. 4 years ago, a failed medical device maker called Bioptics rebranded itself as Riot blockchain in order to no doubt capitalize on the blockchain craze. While I was initially skeptical, it seems like this transformation has seen the company build a really profitable mining business. You can take a look at the growth of the company over the past 2 years, as it's been acquiring thousands of mining rigs and signing co-location agreements. However, one of the biggest moves by the company came earlier this year when it acquired Whinstone US. This is the owner and operator of North America's single largest Bitcoin mine, that based in Rockdale, Texas. Riot blockchain is now one of the world's largest public Bitcoin miners following this acquisition. When it comes to the numbers, Riot is a much smaller company than Coinbase, but it is growing aggressively. Its revenue in Q3 of this year is up over 26 times. Now, although the company is still making an operational loss, it seems to be shrinking this number. Moreover, gross margins are strong at over 60%. I should also point out that when it comes to inventory on the balance sheet, Riot blockchain holds over 3,900 BTC. This, of course, gives it additional exposure to the price of Bitcoin. The majority of these coins were mined just this year. Now, like Coinbase, Riot released third-quarter results that missed analysts' expectations and hence drove the stock price considerably lower. The company posted a slight loss of 16 cents per share when the consensus estimates were for earnings of 35 cents per share. But this did not come down to something in the core business. According to Riot, this was down to, quote, a non-cash stock-based compensation expense of $36 million and a non-cash unrealized loss of $11.2 million on marketable equity securities. So, in my mind, the large fall in price post the Q3 results is a bit of an overreaction. And if you take a look at the average analyst recommendations, the consensus is a buy with the average target price on the stock of $53. But it's not just the company itself that's appealing, it's the macro factors that are moving in its direction. Allow me to explain. I've been covering the Chinese crypto mining ban for months on this channel. When it initially happened, I said that it would be one of the best things for the long-term health of the Bitcoin network. While there was a massive fall in hash rate post the ban, miners in other countries were more than willing to pick up the slack. Not only that, but many of these Chinese miners were forced to seek greener pastures in countries beyond China's borders. One of the largest recipients of this was, of course, the United States. Check out this hash rate graph over here from the fine folks over at Cambridge. They've been tracking the geographic dispersion of the hash rate over the past 2 years. From controlling almost 75% of the global mining hash rate a year ago, China has virtually nothing now. A year ago, the US hash rate stood at 6.7%, whereas right now it controls over 35%. Okay, so what does all this have to do with Riot blockchain? Well, the first and most obvious benefit means that it no longer has to compete on an unlevel playing field. Electricity prices for miners in China were incredibly low, mainly as a result of their reliance on coal-powered power plants. This meant that Chinese miners could still remain profitable even if we saw large falls in the price of Bitcoin, as happened back in the 2018 crypto winter. Now you have a situation in which all of these miners will have to compete in similar regions. In fact, many of those Chinese miners are now relocating to Texas, the exact state where Winston has its Rockdale facility. Moreover, this exodus of Chinese miners to the US means that there will be a lot of demand for hosting facilities and expertise. This is another method by which companies like Riot Blockchain could generate revenue, co-location agreements. According to Riot, the Whinstone facility already hosts about 200 megawatts of institutional mining clients. This Whinstone facility has a total capacity of 750 megawatts, which could easily be filled up with additional demand from new miners, assuming Riot does not want to use it themselves. The point of the matter is that Riot Blockchain is uniquely positioned in the US Bitcoin mining landscape. It has large facilities and a strong pipeline of mining rig orders. Now, what's important to note about Riot Blockchain, or any other miner for that matter, is that its profitability is inherently tied to the price of Bitcoin. Although the current price of Bitcoin is well above Riot's average cost to mine of $34K, its return to full profitability is contingent on that price. But what happens if you were keen on a financial services stock that was not only highly profitable, but also rapidly expanding its services in the crypto space? That company is Square, Jack Dorsey's financial services and digital payments company. And when it comes to TradFi companies embracing crypto, Square remains unrivaled. Now, of course, it helps that Jack is a massive proponent of Bitcoin and the power of crypto. But we'll come to those crypto adventures in a sec. Let's first take a look at its core business. There are a number of products that are offered by Square, but perhaps two of the most popular are the Cash App and the Square Reader. The former is its well-known consumer payments app, whereas the latter is its merchant card reading solution. These have been incredibly strong over the past 2 years, and especially during the pandemic. In the first 9 months of 2021, Square's revenue jumped 114% year over year to $13.6 billion. Moreover, Square remains highly profitable, albeit at a lower gross margin than Coinbase. Square also made a massive purchase in August of this year when it acquired an Australian payment startup called Afterpay. This buy now, pay later company could give Square a foothold in the incredibly lucrative short-term credit market, seen as encroaching on credit card companies. For those of you who've been in the crypto space for some time, you'll no doubt have heard of Anthony Pompliano, or Pomp. Well, he recently argued that Square's purchase of Afterpay could see the market cap of Square 5x from here. Now, I'll admit this is a pretty punchy forecast, but he does make a compelling case for it. Essentially, with 100,000 merchants, Afterpay had a $29 billion valuation. However, if Square was to use that technology in its network of 70 million Cash App users and 2 million merchants, you could see the value skyrocket. I've linked to the whole video below should you want to give it a watch. So, it's quite clear that Square has a solid core business. However, it's what it's doing in crypto that's most exciting for me. Ever since 2014, when Square allowed sellers to accept Bitcoin in its online stores, it's been looking for ways to further capitalize on crypto. The most profitable move so far has been the move to include Bitcoin purchases and selling in its Cash App. This was enabled back in 2018, and it's been a success ever since. For example, in Q3 of this year, the Cash App generated $1.8 billion in Bitcoin revenue. This is up from 11% last year, and over the past 2 years, Bitcoin revenue and gross profit grew 250% and 343% respectively on a CAGR basis. But this is only the tip of the iceberg when it comes to what Square is doing in the cryptocurrency space. Firstly, you have the fact that Square has actually allocated Bitcoin to its balance sheet as a treasury asset. In the fourth quarter of 2020, it invested $50 million, and then in the first quarter of this year, invested a further $170 million. Now, while this does give Square direct exposure to the price of Bitcoin, it's nowhere near the levels of balance sheet allocation that the likes of MicroStrategy have. However, this does mean that Square won't have to deal with some of the massive mark-to-market accounting swings that MicroStrategy has to. Beyond just simple Bitcoin purchases and balance sheet allocation, Square is also looking to get involved in the hardware wallet space. In July of this year, Square's head of product development announced that Square will be building a hardware wallet. The goal was in order to make self-custody more mainstream, but it could prove to be lucrative. That's because hardware wallets are big business, and the markets are dying for an alternative. And if you want to hear my thoughts on the best hardware wallets out there, then you can watch my video on it. That's in the top right. Another really impressive Bitcoin initiative by Square is that it will be building a, quote, Bitcoin-focused business division. According to this tweet by Jack Dorsey, this would help make it easier for developers to build non-custodial, permissionless, and decentralized financial services. This division inside Square recently released a white paper for a decentralized Bitcoin exchange. This will be called the TBDEX, and it would extend Square's mission in the crypto space. While it's not immediately clear how Square will be able to earn off of this, or even if it will be able to, it does further show the commitment of Square to the crypto space. My complete speculation here, but it would only be logical for Square to integrate the Cash App with this DEX. This would provide a fiat bridge whereby people could easily get in and out of Bitcoin, sending it to their friends in a permissionless manner. So, it's quite clear that a bet on Square's stock is not only a potentially solid investment based on its core business, but also a bet on a rapidly expanding crypto services company, one that I think is undervalued. And I'm not the only one that thinks this way. According to the consensus analyst estimates, this stock is an overweight recommendation, and the average target price is $299. I want to finish this off with a few of my famous final thoughts. Some of you may indeed be asking, Guy, if I was bullish on Bitcoin, why wouldn't I just buy Bitcoin? Well, that's because your investment is 100% price exposure. There's nothing wrong with that, of course, but you don't own a stake in a company that's able to make money from Bitcoin. A company that could make that money even if Bitcoin falls by 5% tomorrow. And a company that could, in future, distribute some of those profits to you on an ongoing basis in the form of dividends. When it comes to Coinbase, it's a really strong play on the continued longevity of the crypto markets. Yes, it's highly dependent on trading volume, but it's expanding its services and functionality greatly. The launch of the NFT marketplace is bound to bring in a completely different business line with strong upside potential. Riot blockchain is a bit more of a speculative play on the strength of North American Bitcoin mining. Yes, the company had an unprofitable quarter, but the trend is in the right direction. You only need to look at the sheer volume of mining chip orders that they have coming online in the coming months. Add to that it owns the largest Bitcoin mine in America, and it's well positioned to benefit from a Bitcoin boom. And finally, I like Square because it's a more diversified play. It's less dependent on the Bitcoin markets and allows you to gain a stake in a company with healthy financial performance in the TradFi space. But if you have the same vision as Jack Dorsey as it relates to crypto, then a bet on Square is a bet on that vision. Now, of course, I do encourage you to do your own research before jumping into any of these. Just because they're stocks does not mean you should be taking unnecessary risks based on the opinion of some crypto YouTuber. And that's it for my video today, chaps and chapettes. But I'm keen to hear from you. What do you think of my picks? Are there any other stocks that I should have included in my list? Let me know in the comments. And while you're tapping away at that comment, you absolutely have to check out my socials page. This has the links to all of the official places that you can follow me off the tube, and it includes my Telegram channel, where I share market analysis and views, Twitter, where I share news and other tips, Instagram and TikTok for behind-the-scenes views and memes, and of course my email newsletter, where I share a breakdown of my personal portfolio as well as a breakdown of some upcoming videos. If you want to help support the channel, then why don't you grab yourself some of my epic merch? I'm sure that there's something in the store that will tickle your fancy. And finally, if you found this video fine, then fire up the likes. Don't forget to subscribe to make sure you're in line to receive my latest crypto vibes. Oh, and hit that bell as well. We don't want it to get lonely. That's it for today, my fellow crypto fans. This guy's gotta fly.